What to expect tomorrow? Lincoln Ellis, Chief Investment Officer with the Strategic Financial Group, also along with us tonight from Chicago. So, Lincoln, do you think a cautious day of trading or a wild volatility?
Well, probably a bit of both. As you know, it's the month end, and you have a fair amount of portfolio rebalancing that will happen tomorrow. That, combined with 2 days' worth of pent-up trading pressure, will certainly make for some interesting trades. And as David alluded to, it will be interesting across particular sectors as the day goes on.
Speaking of, which ones will you have your eye on in terms of stock sectors?
Well, what we really are interested in and have been looking at are the potential overvaluations of a lot of the defensive sectors in the S&P 500. As you've made note over in the past, we see a lot of the typically defensive sectors now trading at multiples 2 or 3 times above the larger or broader market multiple, and that, to us, actually is a bit worrying.
Couldn't the kind of situation we're seeing on the eastern seaboard, though, the short-term economic impact of the destruction that we're seeing, let's forget about the rebuilding for an effort, Lincoln, couldn't that lead to more defensive stance on the part of shareholders?
It could, but that defensive stance, Tom, as you well know, would probably be to exit those markets or to enter more safe securities. So if that were to be the case tomorrow, again, you would be headed to your staples neighborhoods, your dividend-producing neighborhoods, perhaps with the exception of utilities, given their hit in this storm. But you know, look, it's the end of the month. We've been off for 2 days. It'll definitely be an interesting day to watch.
That's saying a lot and a little, Lincoln. Absolutely. Very interesting. Do you wind up buying, though, if you see the initial reaction moving lower? In other words, I guess if you're moving away from defensive areas, are you looking for growth, and where are you going to find it?
I think at this stage of the game, Tom, given the way that equities have performed, and they've performed extraordinarily well this year, as in fact have large parts of the fixed income complex, it may be prudent for investors to actually be looking to take a little bit of money off the table in both of those baskets. Wait till we get through the election, a little bit more clarity, not only in 1600 Pennsylvania Avenue, but over there in the Houses of Congress. And see where we are set up in terms of a trajectory for the conversations around the fiscal cliff. Remember, we also have a transfer of power in China happening in the first part of November. So a lot of things happening, and we've had good returns, so it may serve investors well to step to the sidelines a bit.
I do want to talk here in our final minute about the bond market. It's also been closed. Not a lot of activity going on there. Certainly where the Federal Reserve is in play. Interest rates are low, but do you anticipate any initial reaction here at the end of the month with the bond market reopening?
Well, the futures contracts have been open, and we have seen moderate ranges over the course of the last 2 days over those trading, as well as the European markets, which have keyed. There's a lot of relative value between, say, German Bunds, their 10-year bonds, and our U.S. 10-year Treasury. Given where interest rates are and given where we are both in the American earnings cycle and in the economic calendar more broadly, I would expect very small moves in bonds for the balance of the year as investors continue to stay defensively positioned and concerned about the issues that we talked about earlier.
All right, Lincoln, get some rest. We're back at it tomorrow for the first time in 4 long days. Lincoln Ellis along with us in Chicago. Absolutely. He's the Chief Investment Officer at the Strategic Financial Group.